Hey, folks, welcome to InTheMoneyStocks.com's daily analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, everybody. Holy cow, we're into the thick of things here. Markets closing lower on the day after a gap up. Now, granted, we were still holding key support right here. I think that's important to recognize. But again, I have to say, Apple earnings will be out any minute here. Literally 2 minutes I expect them out, as it's 4:28 p.m. Eastern time. They usually release at 4:30 p.m. Eastern time, and this is going to make or break the markets. I'm telling you right now that if Apple tanks big, let's say 5% or more, you could be in for a kind of a technology type flush out crash tomorrow. Now, if Apple can rebound and have a good after hours, then you could absolutely see technology rebound successfully and have a big move up. Now, if Apple's flattish on the after hours or up or down slightly, well, again, I generally think the markets seem to be short-term weak here. We'll see if they can get some traction. But again, I haven't been impressed with how the market has traded over the last couple days after Jerome Powell. Jerome Powell really killed things yesterday. I mean, let's be honest. Now, I still think ultimately we should get some bounces in the stocks. You guys saw I did a lot of buying today, adding to positions, buying new positions. I bought some Chinese stocks because ultimately I think those are going to be outperformers for the next 6 to 12 months. So I did a little fishing there. But bottom line is, again, Apple earnings after the bell coming out here, again, should be out really quickly. By the way, we do have some earnings out from like Robinhood. I mean, take a look at this, guys. Robinhood is just getting smoked in the after hours here. Let me see if I can pull up the after hours quote here on this. Doesn't look like I can, but I can tell you right now that it is trading down substantially in the after hours. Robinhood right now trading at $10.20 after closing at $11.62. So that's a pretty hefty drop there. There's no doubt about it. You know, you're basically down $1.40, which is over 10% in the after hours on that. And I'm also seeing some of these other ones. Western Digital, let's take a look at that. Western Digital is also, I think I saw that was down on earnings as well. WDC, yep, Western Digital closed at 53.69, trading at 46.50 right now in the after hours. So that's a semiconductor, means more pressure on semis likely, and we'll see again how that plays. But Apple again, Apple earnings should be out here any second, if not already. Apple trading up a little bit now in the after hours. Looks like earnings may be out. Looks like earnings may be out on Apple. Let's bring it up. You can see right now up a little bit. This is live, or at least live to me as I'm doing this video. But again, that's not a significant move on Apple, and I don't know if it'll hold. You know, you're not rip-roaring to the upside. Earnings obviously must be solid, but the question is, are they good enough? Now back up to 162 here, 162 and change. We'll see if they can continue to climb. And again, ultimately, this is going to be the kicker. Can Apple at least have a decent quarter? Can it save the market? Can it save cryptocurrency? I was even saying this today, is that really cryptocurrency is going to be dependent on Apple, because if Apple tanks, then technology tanks, and if technology tanks, crypto tanks again. So, I mean, all of these things are interconnected, and right now Apple is up a little bit on the back of earnings. Again, earnings are out. It's not a huge bounce on Apple. In fact, we're not even up to the highs of the day from today, which was around 163.75, but certainly it's at least trading slightly higher. Can it hold? We'll see what their guidance is. So obviously their earnings were slightly good. That's why the stock is up, but now it's going to be all about guidance. Can guidance come in strong, better than Wall Street anticipates, and can it get a bounce here? All right, so we will continue to follow this. I will check back on it. Let's go back to the Spiders chart here on an intraday basis and just take a look. And again, I will keep one eye on Apple in the after hours. But again, a lot of stocks in the after hours are trading down. Robinhood, WDC is down. Granted, Apple trumps those all. But again, just important to kind of note that, a stock like Robinhood, right, which has been beaten down so relentlessly, so relentlessly, is under pressure again in the after hours on earnings. And again, this was a cult favorite. Robinhood obviously being, Reddit kind of, younger crowd coming into the markets. And again, just getting, these people that invested at these high levels are just getting wiped out. I mean, look at some of the stocks that we're buying and accumulating down here. Look at where they were over the last year. I mean, insanity. All right. Again, markets opened higher, then they faded, and then they went sideways into the end of the day. Right now, you can see, again, we closed at 431.22. We're about at 433. So on the spiders, up about $1.80 or so. Again, as long as Apple holds up, that should be a positive for tomorrow. Again, can it hold up? We will find out. All right. Looking at the QQQ, you can see the Qs following same kind of pattern. We had a gap up here on the QQQ, and then we fell back down throughout the course of the day. And basically at yesterday's lows, you can see right there that support. If we break that support, this is the low from the other day, that is going to be your major support. All right, that is going to be major. By the way, Apple gaining a little bit of traction here. You can see the Qs are now up over $2 in the after hours. But again, look at that. Up $2 is right here, guys. I mean, this is the insanity of the volatility that we are in right now, is that even with this $2.10, now $2.30 move, this is where we were earlier today, guys. I mean, is that nuts? To me, it's nuts. To me, it is absolutely nuts. But again, bottom line, so far, so good. So far, crypto not doing a whole lot. It's uptaking a little bit. But again, if technology starts to really catch a bid tomorrow, I do expect cryptocurrencies to get a little bit of a bounce here. We'll again watch and see if Apple can hold its gains here once it releases guidance, once all the news has been factored in. Looks like iPad revenues missed by a little bit, but overall the numbers were very, very good. It probably helped that Apple sold off a little bit going into this print or going into over the last couple of weeks with the market, kind of lowered bars just a little bit in terms of what people were expecting. All right, quickly, again, I'm going to kind of go through these intraday charts real quick. We'll look at the Russell. The Russell was under pressure again today. One of the things on the Russell that's important here, folks, is take a look at this. So the Russell kind of ended right at this low here. This is a major support on the Russell. If you break this level on the Russell, we can flip over to the daily chart and see where you're going. But basically at this point, you can see this was this support. Your next support, I'll show you guys, I'll put them on the charts right now. Your next support on the Russell is 185 right here. So it's another $6, $7 lower. And then after that, you're talking about there's a gap fill right here at around 178, 177 area right there. Eventually, I think the Russell goes down here. I would just be very surprised if it goes straight there without a bounce. All right. Mainly because, this sell-off has been epic right here. I mean, this was kind of, well, number one, you could also see a measured move here, right? So if you take this distance here, okay, and if you replicate it, we're basically... that's that same distance there. So usually, this is just one more reason why I've accumulated some of the TNA recently, because of that measured move on it. Now, it doesn't guarantee anything, as we know, but again, that does give you even more credence, plus the support line right here that we've been holding right in this range. Okay? So again, let's see what we got here. I want to flip back to the S&P daily chart. You guys can see this longer-term uptrend that we were in since COVID, and then the even longer-term trend that we were in. And again, ultimately, my thesis is that if the Fed is really pulling out, then you need to see markets come back at least to here, which would be the high end of the long-term range, and likely they will come back in here. My worst-case scenario for 2022 is a move down to 340 on the spiders, which would be the high pivot from the pre-COVID, before the COVID collapse. That was your high, all-time high right there. It's right in the middle of this channel, which makes a lot of sense to get us back inside of that channel. Again, I'm still in the camp that we bounce first, but ultimately I do think, as I've said for a long time, that we will be seeing further downside on the charts. Okay? All right. Couple other things here to go over. Let's look at the QQQ real quick. The Qs, again, this is your support level right here. This is where we've been at. Here's that upsloping trend line that we finally rolled over from. Again, the low pivot here is around 334. If that does not hold, your next level is pretty obvious here. You can see it right on the chart. I'll draw in a line. This would be your next pivot, which is just below 320, around 318, I would say. And then after that, this will be a mega level at 300. Huge level at 300. This one's the mega one right there. Will eventually we go back to the pre-COVID high as well? Yeah, I honestly do think so. What's so scary about that, folks, is that you're talking about a move from 405, 410 on the QQQ down to 240. That's pretty nuts. By the way, Apple down a little bit off its highs, but it's still holding a gain at 162.5 to 162. Certainly not a resounding mega move to the upside, but certainly it is a positive right now, which is, again, keeping the futures up. You can see the Q's still up about $1.40, but only $1.40 now. Not a huge move by any stretch. Okay? All right. Let's get into some other things here, folks. I want to get into the crypto chart of Bitcoin real quick. We'll do our Bitcoin analysis. Bitcoin analysis, there's not a whole lot new to report. You saw a 39,000 high print yesterday, just as the Fed was about to release or releasing their statement, and then you saw a reversal to the downside, and we currently are trading around 35,800. So that's a big move. I mean, that's 3,000 and change from this high yesterday just to this low. The biggest thing and the only thing that matters is this lower trend line here, right? That's what matters for this crypto market. If that gives way, watch out below. Okay, that's just that simple, folks. That's the line to watch. If you take that out, you'll have a little bit of support here at around 29,000. That would be your next support here. That's the lowest point since the correction from April into June. And then after that, you're then talking about, in all fairness, and I've said this before, is eventually you got to think 20,000's in the cards. And where do I get 20,000 from? This is the high pivot just below 20,000 from the December 2017 high on Bitcoin. All right, do I think it's going to go lower than that? Unfortunately, yes, I do. But you're going to see an epic bounce there, or at least you should. You should see an epic bounce there. Okay. Quickly going to a few other charts here. Let's look at gold. Gold had another big sell-off. Now, you might say, well, why the heck did gold sell off today so much? And bear with me here, GOLD. There we go. So look at gold. So amazing how it got right to the high end of this this wedge pattern. Then look at the sell-off today, trading right now at $1,796.41. And the answer is very simple. Look at the dollar. All right, so we'll look at the UUP, which is the easiest way, but look at the rip-roaring move. So this is really it, right? So again, a lot of people are like, wait, I don't understand why gold is selling off. Why is silver dropping so much? And the answer is very simple. Huge move here on the dollar, and even bigger move today. Why did the dollar rally today? Well, dollar rallied yesterday because of the Fed hawkishness, right? I mean, it's just that simple. The hawkish Fed is going to create a dollar rally. That's bearish right now for gold. Today, it may have been partially due to the Fed and maybe carryover, but today was the GDP. GDP came in at 6.5%. That's amazing. 6.5% growth. And remember, granted, it was right before Omicron, but honestly, I haven't noticed a whole lot of difference since Omicron started, so I don't think it's going to be that much down. But basically, a hot economy means the Fed has to be more aggressive in raising rates. Therefore, the dollar, it reacted again to the fact that the Fed might even have to be more aggressive. By the way, checking back in on Apple, take a look at this, guys. Apple is now at 164.50. What's impressive about this is Apple is now above the day's highs. I don't know if it'll hold, but at least it is above the highs, and it's holding its gains thus far. Now, it could change once the conference call starts. I've seen some wacky stuff. Like, remember when Microsoft reported the stock was down significantly, and then once they had the conference call and more detail came out, it actually rocketed to the upside. But right now, trading nearing 165. Beautiful little move on Apple, up about 3%. Not a huge move, but for Apple being a $3 trillion company, that's pretty solid. And that should get some stocks kind of inching up just a little bit, or at least I would think that would be exactly what would happen there. All right, let's take a look here. I want to look at a couple other things here on the charts. And again, really amazing to see the deleveraging going on in some of these names like Teladoc still. SE was down multiple dollars. I mean, again, at like 5-6%. Really amazing. Affirm was down big again today, although did come back towards the end of the day. But yeah, I mean, just absolutely. And look at that. Apple now above 165. Let's take a look at the Qs. Qs are now up $2.30. Again, still not that big of a move, but in the overnight, if Apple holds, I'm sure you'll see more buying in technology. Let's do a quick check on the spiders. Spiders are now up $2 in the after hours as well. So again, what's crazy is that in comparison to the day's move, this is a very small move, but I do think that there's a chance if Apple holds up here that buyers do come into some of these beaten down names. I like that NET was up today, which is good, even though it ended kind of at the lows of the day, but still green on the day. Here's your intraday chart. But hopefully that's putting in some sort of bottom. Again, SE, just a train wreck there, but I had to add to that position. Closed at 126.56. It's up about $2 in the after hours on Apple. But these stocks have just been brutalized, folks. Let me just show you guys a couple of these daily charts. And by the way, one of the biggest holdings for Kathy Wood in the ARK Invest is Teladoc here, which again, for us having our average where it is and being able to accumulate is just, I look at us, is it scary? Yeah, of course, if you let emotion play. But if you look at the chart here, look at this level here, folks. Let me put in a trend line. Look at these tops right here. and then look at where we currently are, right? I mean, you're basically back to pre-run COVID moves. That, again, you have a lot of deleveraging, which is why these things get pounded more than you would think logically, which, again, in all fairness, could even go, I mean, we could go down here for all I know on Teladoc. But having said that, at some point, cooler heads, logical heads will prevail, and you should start getting a little bit of a move or a significant bounce. I think Teladoc goes back to 100 plus, personally, on just a regular run-of-your-mill technical bounce. If you look at the drop here from here, just a retrace to 100 is right back to here. I mean, look at that. I mean, in reality, it wouldn't even shock me to go back to 120. 120 is kind of my max upside on that. But again, when you have these type of epic drops in these stocks where people are throwing the baby out with the bathwater, and again, should Teladoc ever have been at 300? Hell no. But again, now at 67, and you start to say, okay, they do, I think they're projected to do $4 billion in revenue or something in that range. And there's actually starting to be a case to be made for actual fundamental value. Are they profitable? No, absolutely not. But at the same time, you have to start saying, okay, well, based on the revenue, based on the growth, there is a way to value these stocks. Teladoc is trading at about a $10.8 billion market cap. And again, projected to do, I'm just bringing up some on so they're projected to do about $2.57 billion. So they're trading only at about 4 times 2022 revenue numbers, that they're expected, which isn't that crazy. I mean, if you remember SE when it was at 300 was trading at like 50 times. And then look at this thing. Look at this drop on this thing. All right. And again, if you look at technical levels, you're definitely coming into one. In fact, you did hit a good one today right here. Take a look at this line right there. So this pivot right there, and you've now wiped out. You have to go back to all the way to 2020 June at this high to find the last time we were kind of trading at that level. Which again, it was an amazing run. But by the way, always remember, stocks take the elevator down. They go up on stairs. They take the elevator down, unless you're a Reddit crowd and in the height of the Fed printing money, and then if you're like GameStop, then it takes the elevator up. But that's very, very rare. Apple's still holding right around 165, stalling out a little bit, but again, at this point, at least it's holding up. We'll see if it continues to kind of stay positive and hold these gains, and again, we'll see what the markets do tomorrow. Okay, let me see what else I want to touch on here. So we touched on gold. Let's touch on silver. Silver got hammered today as well. Silver kind of a double whammy in my opinion. Silver was down significantly over 3% today. And the thought process here, number one, I was very close to buying some silver, but I kind of let it go for now just to see what it does tomorrow. But number one, the dollar was stronger, which is negative for it. Number two, I still worry that the Fed pushing so quickly to hike rates, to taper, to lower their balance sheet, is that going to cause the economy to slow? In which case, yes, long-term with printing of money, that'll start up again. But in the near term, would it potentially force silver down to like the 19 level I've talked to you guys about because of the industrial lack of demand? And by the way, can I just show you guys something so cool? I was just talking about this in an interview today as well on oil, but I want to show you this. And this is why I'm so bearish on oil. Maybe I'm a little early to the punch because oil was up again today, closing around $87. But again, number one, it didn't close above this little topping tail. But again, even if it goes up, I think I showed you guys yesterday the trend line here. If you connect these highs, this is kind of my max upside right up here, right? So I think it was around $90, $91. But let's get rid of that, and this should blow your minds like it blew my mind. So if you look at cycles, all right, we're going to do a little cycle chatter here. So cycles, the way cycles work is when initially a market goes into a bear cycle, you don't see hedge funds and institutional investors running from everything and selling everything. What they do is they rotate, right? There's a rotation. We saw the rotation earlier in in 2021, mid 2021, late 2021, where a lot of stocks were in bear markets. I talked about this. I talked about relative strength and how weak the markets were in the underbelly versus the Apples, the Microsofts, the Amazons, the Googles, which were carrying the indices higher. So there was that rotation. But again, as you see those stocks start to falter, we've seen Microsoft fall, 10, 15% off the highs. You then have to look for that next rotation, and that happens to be oil historically. So what I want to show you here is a good example is that here was, so remember in 2008, right? So the markets topped out right at the end of 2007 and the beginning of 2008. Oil had an epic run that lasted all the way until July and August of 2008. So while the stock market was in free fall in that first portion of the the financial crisis, oil was ripping higher. And what was going on here is the institutional investors were dumping everything but buying oil stocks and oil. And it was just an overcrowded trade. And then what happened to oil? It caught up very quickly. By the time the markets bottomed in March of 2009, oil had collapsed from $145 down to $33. One of the most epic collapses in history in oil. All right, just to show you guys this, let's look at the spiders, right? So let's go back to 2008. So here's your monthly 2008 chart. All right, so we just showed that it was August of 2008 before oil started to fall. And if you look here, here was the top in October of 07 on the spiders on the S&P. So you basically had almost a full year of downside in the markets before oil topped out off its meteoric run. The reason I'm showing you that is because if I'm correct and we are going into a bear market in stocks and in the markets, then this playbook is working out exactly how the playbook worked out in 2008. All right, meaning that the equity markets top out first. Hedge funds and institutional players, they don't just exit the market totally. They just go to a different area. So in this case, they went to oil in 2008. Look at what oil's doing now. Markets are heading down. Oil is heading up. Ultimately, what you're going to see, if the markets continue down, eventually oil will turn around and collapse very quickly. All right, now again, how high will oil go? That's the question mark, right? We honestly don't know. I'm not going to pretend to know. Is it, I can just go by the charts. I showed you that trend line on the oil chart before that was around $91 or so. That makes sense to me to be a potential top on it. And again, all we can do is kind of just watch it and see. But yeah, really remarkable, folks. Really, really remarkable. When you look at history, I think history is so fascinating in terms of showing us things don't necessarily totally repeat, but they often say they rhyme, and I agree with that. I absolutely agree because, again, remember, markets are traded. Who's the investors in a market? Humans, and human emotion doesn't change over time, so therefore cycles should look relatively the same. Apple is pulling back a little bit here, folks. You can see just a little bit of a pullback, still up about $5 in the after hours. Certainly not a big move whatsoever. This is the monthly chart. That's why it looks so wacky here. Let's go back to the daily chart. So again, a little bit of a move here, but it is starting to fade. So this is what you're watching, folks. This is what you're keeping an eye on, and we'll see if it ends up holding. All right? You guys have a wonderful rest of your day. Let's see what tomorrow brings. Certainly I'm curious. Take care.